The Australian Financial Review.
I'm in the lockup with John Keogh, our economics editor, our markets guru, Johnny Shapiro. The RBA has just delivered its first rate cut. Since November 2020, it has cut the cash rate to 4.1%.
That's the Financial Review's economics correspondent, Michael Reid. On Tuesday, the AFR team were down at the Reserve Bank lockup for one of the most closely watched interest rate decisions in years.
It will be a hawkish cut as well, because the statement of monetary policy that we've been reading in the lockup has been pointing to some lingering inflation pressures.
In removing a little of the policy restrictiveness in decision today, the board acknowledges that progress has been made, but is cautious about the outlook.
At the press conference an hour later, Michelle Bullock confirmed the Financial Review's quick take and made it clear that this cut doesn't necessarily mean more will follow.
We cannot declare victory on inflation just yet. Today's decision does not imply that further rate cuts along the lines suggested by the market are coming.
While Treasurer Jim Chalmers was quick to play down the politics.
Today's decision was about economics, not politics. The timing of the election is a matter for the Prime Minister.
Speculation is growing that an election will be called sooner rather than later.
If the Prime Minister wants to capitalise on this sense of hope, he would have to call an election soon.
Welcome to The Fin. I'm Lisa Murray. Today, Editor-at-Large Michael Stutchbury and economics correspondent Michael Reid on why the Reserve Bank cut rates this week, whether Michelle Bullock is one and done, and how this affects the timing of the election. It's Thursday, February 20.
Today's episode of The Fin is brought to you by IG. IG is Australia's #1 CFD and FX provider, offering over 17,000 markets from domestic shares to international commodities, all on one platform. With competitive spreads and lightning-fast execution, trade the opportunities you hear with IG. To find out more, visit IG.com. CFDs are high-risk products. Refer to our PDS and TMD on our website. #1 in Australia by primary relationships, CFDs and FX. Investment Trends November 2023. Leverage Trading Report. IG Australia Proprietary Limited. AFSL 515106.
Hi Stutch, hi Mike. Thanks for coming on the podcast in a very busy week.
Hi Lisa, it's exciting.
I'm tired, Lisa, but I'm thrilled to be here.
The last time the Reserve Bank cut interest rates, we were in the middle of a pandemic and it was part of a rescue package for the Australian economy. This time is very different. Before we talk about this week's decision, bring us up to speed. What has happened in the more than 4 years between rate cuts?
Well, as you say, Lisa, the Reserve Bank cut interest rates down to basically zero, 0.1% in that first year of that pandemic, that really scary year. Interest rates were very low already, and they cut them pretty quickly down to basically zero, and they held them, pretty much nailed it to the floor. And Philip Lowe, the Reserve Bank governor, promised to keep the cash rate nailed to the floor at virtually zero, so cheap money, the cheapest you can get, for at least 3 years.
The cash rate is very likely to remain at its current level until at least 2024.
They figured that the economy was hit so hard by COVID that you'd have no inflation pressure, you'd have no wage pressures, and you'd keep interest rates basically at zero.
What we now appreciate about the pandemic in hindsight was that it was largely a supply shock rather than a demand shock, which is more like a traditional recession. So when health restrictions were eased at the end of the pandemic, people were effectively pump-primed to start spending again, thanks to all of that stimulus. And so then what we saw from mid to late 2021 was that inflation globally really started to pick up. Consumer demand was strong, and in many cases, supply chains and business models were still disrupted from the pandemic. And so any economic textbook is going to tell you that if you've got an increase in demand and a reduction in supply, that's a recipe for higher prices.
The extent of the turnaround in inflation has come as a surprise to many, including us at the Reserve Bank.
And abracadabra, you got this burst of inflation that Australia and the world hadn't seen really since the 1990s. And then in February 2022, Vladimir Putin invaded Ukraine.
Whoever tries to hinder us, and even more so to create threats to our country, to our people, should know that Russia's response will be immediate.
So that sent energy prices, oil and gas prices soaring, and that fed into inflation as well and just added to all the supply chain disruptions.
I'd like to take this opportunity to explain the Reserve Bank Board's decision earlier today and to answer your questions.
The RBA then got cracking a few months later. It started raising rates in May 2022.
The choices that we make in Australia during this challenging period will help shape our own destiny.
Just before voters booted Scott Morrison and the coalition government out of office and elected Anthony Albanese's Labor government.
In May 2022, they started these 13 interest rate increases.
The board decided to increase the cash rate today by a further 0.25 percentage point.
That lifted the cash rate by, firstly, 25 basis points, then a couple of 50 basis points, double rate hikes, and then 25, 25, 25. And then...
Please join me in welcoming the new Governor of the Reserve Bank of Australia, Michelle Bullock.
As I'm sure you're all aware, the Reserve Bank Board raised interest rates by 25 basis points.
Up until you get the peak of 4.35% in November 2023.
And the board won't hesitate to raise the cash rate further if there's a material upward revision to the outlook for inflation.
Where it's stayed until this week now.
Mike, you used to work at the Reserve Bank. Were you there for the last rate cut?
Yeah, I was. So November 2020, I was still at the RBA. Rate decisions in general are a pretty relaxed day for sort of junior burgers at the RBA like I was. A lot of the work is done in the lead up to the meeting, creating the board paper and doing all of the analysis that gets fed to Bullock and the board members. So rate day itself for staff members is a very quiet day. Usually we go and get coffee and I don't think anyone, including myself, would ever have predicted what wound up happening from 2021 onwards. So I'm guessing my 2020 inflation forecasts may have been correct in the near term, but probably not over the medium term.
Mike, how is the Australian economy tracking? Before it made its decision, what was the RBA looking at?
The board would have been grappling with some mixed signals out of the economy. GDP growth is very slow. It's close to its slowest rate since the early 1990s recession. Consumer spending, while finally picking up, has been very weak for some time now. On a per capita basis, the economy's gone backwards 7 quarters in a row. So that's all an incredibly negative outlook. But on the positive side, the jobs market has been roaring. The unemployment rate at 4% is close to its lowest level in 70 years. And despite that, we've managed to finally get inflation to come down. It has been falling steadily on an underlying basis. It's now at about 3.2%, so just above the RBA's target band and far lower than the highs that we saw a couple of years ago.
So that brings us up to Tuesday. You were both down at the Reserve Bank in Martin Place when the rate decision was announced. I saw you in the front row, Mike. I'm not sure where you were, Stutch.
I was up the back with the bad boys and girls.
Bullock was very clear that this cut doesn't necessarily mean there are more to come. How did she explain the decision?
It was an interesting explanation.
Good afternoon. Thank you all for coming. As you know, the board decided today to cut the cash rate by 25 basis points to 4.1%.
Bullock framed the decision as because the RBA board had gained more confidence that underlying inflation was falling back within its target band.
It's clear that higher interest rates have been working as anticipated, restricting economic activity and putting downward pressure on inflation. The board judges it's time to reduce a little bit of that restrictiveness, but we cannot declare victory on inflation just yet.
The December quarter data showed that trim mean inflation, which is the RBA's preferred metric of underlying inflation, had fallen to 3.2%. So she said the bank had gained enough confidence for one rate cut, but
today's decision does not imply that further rate cuts along the lines suggested by the market are coming.
She then framed it as a discrete decision where she's removed a so-called cautionary rate rise that was delivered in November 2023 to signal that, hey, I'm not going to do this again anytime soon. This was maybe a bit of a one-off, not the start of a big easing cycle. Because the bank is still worried about a lot of other upside risks. She pointed to the strength of the jobs market is still a concern.
Many indicators suggest that the labour market is tight and on some measures tightening further, which could delay or stall the disinflation process.
There's a lot of uncertainty overseas, particularly with tariffs from the Trump administration. So the bank has still got a lot on its mind, and she isn't comfortable that she can deliver more rate cuts knowing what she knows about the risks to inflation.
I don't think she's used this language of cautionary for the November 2023 rate hike. And you might want to see it as, you're reading it one way, as it's a bit of a payoff for the confidence that inflation is going down, which it is, and it's most likely heading into the target band. So she delivered the one, but then came out and said, well, hang on, market, you're getting way ahead of yourself. And so in effect, I think that's ruled out a rate cut over the next few months, April especially, you know.
Mm-hmm. So, Mike, she is one and done, you think?
Well, bond market traders who make a living betting on when rates are going to be cut, in the lead up to Tuesday's meeting, they were very confident of a rate cut.
Mm-hmm.
Traders ascribed about a 90% chance there was going to be a rate cut. So if we believe the markets, who were correct on Tuesday, they aren't fully priced for another rate cut until July. So there's still a chance before then, but, you know, it's not a done deal in the market's eyes.
Yeah, there'd have to be some really sort of big data which showed that inflation was collapsing or the economy was collapsing. It's hard to see that in that period for her to go back on giving this very sharp warning that we've done one, but don't expect another one soon. Can I say one more thing?
Yeah, sure.
After we'd gone into the lockup and we read the explanation as to why there wouldn't be multiple cuts anytime soon, our colleague Jonathan Shapiro said, well, it was quite convincing, the governor there, as to why, you know, he should wind back any expectations of cuts down the track and we're not going to get another one soon. And it made you think, well, why did we just have one just then?
Today's episode of The Fin is brought to you by IG. IG is Australia's #1 CFD and FX provider, offering over 17,000 markets from domestic shares to international commodities, all on one platform. With competitive spreads and lightning-fast execution, trade the opportunities you hear with IG. To find out more, visit IG.com. CFDs are high-risk products. Refer to our PDS and TMD on our website. #1 in Australia by primary relationships, CFDs and FX. Investment Trends November 2023. Leverage Trading Report. IG Australia Proprietary Limited. AFSL 515106.
We're talking about the Reserve Bank's decision to cut interest rates on Tuesday. Bond markets have been pricing in a cut and most economists were expecting it. But Stutch, you've raised the prospect that the RBA may have cut too soon. You just asked the question, why did we have an interest rate cut this week? So have they gone too early? Is the inflation battle over?
Well, I think time will tell. As the governor said, it wasn't a lay-down misere. She said it was a difficult decision. There are arguments on both sides. So you can make the case, and inflation is coming down. It's not coming down on the Reserve Bank's own forecasts fast enough for their own targets. So on that basis, they can't go as far as the markets were suggesting. So what didn't, I think, get a lot of coverage was the really substantial risks around the Trump trade war, and there's a debate about whether that's inflationary or not. But I think it falls into all these supply-side disruptions, geopolitical conflict, war, trade wars, the decarbonisation transition. These are all supply-side measures which are keeping inflation up.
To Stutch's point, I think we can be pretty comfortable that inflationary pressures are subsiding and they are coming down. But there never was any real urgency to deliver a rate cut this week. And in part, that's because the jobs market is so strong, and on some measures it might even be strengthening. The unemployment rate recently has actually been falling. It ended 2024 at just 4%, which is close to its lowest rate since the 1970s. Other measures of the jobs market are also improving, things like underemployment and youth unemployment. The RBA is aware of this. Michelle Bullock pointed it out. It's one of the key risks. And when she was asked at the press conference about what was the argument in favour of holding, she pointed to the jobs market as the main reason why they would have held if that was what they did. The concern for the RBA is that while it's great that everyone has a job, is that if the jobs market strengthens too much, that could cause inflation to take off again.
And Mike, in his column today, Stutch referred to the rate cut as a politically convenient rate cut. Most people now expect the government will capitalise on the rate cut, and with people feeling better about the economy, they might call an election sooner rather than later. What do you think this decision means for the timing of the election? And does it boost Albanese's chances?
Yeah, I mean, a rate cut is objectively helpful for the government. They're already out on social media telling people how much they're going to save based off the size of their home loan. For example, households with a $500,000 mortgage will save about $77 a month. Households with a $750,000 mortgage will save about $115 a month. If you live in Sydney or Melbourne and your mortgage is closer to $1 million, you're going to save $154 a month from this rate cut. So it's not huge money, but it's not nothing either. And I think in a cost of living situation that we've been in, they'll sort of point to anything as helpful. But the fact that Michelle Bullock has made it really clear that another rate cut before the election is highly unlikely may limit the boost that the Labor government gets from this rate cut. Voters no doubt will be happy about one rate cut, but they might not be over the moon if they think they're not going to get another one anytime soon. On the timing, Prime Minister Anthony Albanese has until Monday to decide whether he wants to call an election for March 29. There's every likelihood that could happen because if they don't think they're going to get another rate cut again, the argument is, well, let's just go now while the mood's good. If he opts not to do that March 29 election, the front-runner dates are in early April, either April 5 or April 12. In all of these scenarios, it's unlikely that the government would deliver another budget, which is scheduled for March 25. That would be cancelled once the election is called. Prime Minister Anthony Albanese and Jim Chalmers keep on insisting that they're working hard every day, putting the budget together. And I'm sure that's true, but no one actually really expects them to deliver it. And the policies they're working on for the budget, they can still announce during the election campaign.
Yeah, I think the reason why they'll want to try and avoid handing down a budget is there is no bacon to bring home in the budget. The mid-year forecast that was released before Christmas showed basically a decade of deficits. Australia's living beyond its means. Politicians have spent up too big. State governments as well. Some politician at some stage has got to come in and say, we've got to do what they call a fiscal consolidation and pull things back. But they don't want to do that now, and they don't want to tell voters that they have to do it. They want to pretend to voters you don't have to do that. We can still hand out things. Everything they hand out will be from borrowed money, and so they don't want to have a budget really, I think, to show all that because it really puts a glare on it. Look, I think I'd want to say a word for the savers, like myself. The rate cut will be welcomed by the third or so of the population with mortgages. They're very politically sensitive because they're at a stage of their life where they are financially hard-pressed and politicians really respond to the mortgage belt and the swinging voters. But there is a third of the population which has paid off its house and they're savers and they'll be hurt by this. Their incomes will be reduced. They might have done well out of asset price appreciation over the last little while, but still, like myself, I've paid off my house. It took me 35 years to do it. I went through the real hard times, 18% interest rates. That was tough, but I'm more than welcome to hand over my bit of savings to the younger generation as they get on that path to home ownership and have to go through the horrors of a 4.35% cash rate.
As the podcast guest with a mortgage, I would like to thank Michael Stutchbury for his assistance and for handing me that money.
You're welcome, Mike.
Finally, a question for both of you. Do you think the Reserve Bank will be able to engineer its soft landing? Is this rate cut putting it on that path?
If you're the RBA, you'd feel pretty comfortable about the way things are going. Inflation's falling, the jobs market remains strong. They're confident enough that they can deliver a rate cut and remain on that narrow path. The counter argument to that is that perhaps there's still a lot of upside risks to inflation and that rate cut didn't really need to be delivered. If that counter argument is correct, then the narrow path just got a little bit more difficult, but Michelle Bullock seems confident that the rate cut was the right thing to do.
Yeah, there is a possibility that, in a way, the soft landing is sort of already happening and that the economy is picking up as the Reserve Bank forecasts. Inflation is coming down. There is a small chance that they've misjudged and they'll have to lift rates again. That's a small chance. You know, if things turn bad somewhere, job market gets stronger, it picks up more than we thought. But to get inflation down from where it got to, back down into the band, with unemployment going, it's at 4, even if it went to 4.5, that's really quite an achievement. So I think it is correct that overall, it will be quite a good thing to be able to get through the post-pandemic inflation breakout, the global inflation, with getting unemployment down lower. That is quite an achievement.
Thanks, Dutch. Thanks, Mike.
Thanks, Lisa.
Thanks, Lisa.
Thank you for listening to The Fin. I'm Lisa Murray, with Michael Stutchbury and Michael Reid reporting today. The Fin is produced by Alex Gow. Lap Fan is head of podcasts. Fiona Buffini is the head of premium content. Our theme is by Alex Gow. If you like the show and want to hear more, follow us wherever you get your podcasts and consider rating and reviewing us as it helps others find us. For more stories about markets, business and power, subscribe to the Financial Review at afr.com/subscribe. See you next week.
The Australian Financial Review.
Today's episode of The Fin was brought to you by IG. IG is Australia's #1 CFD and FX provider, offering over 17,000 markets from domestic shares to international commodities, all on one platform. Visit IG.com. CFDs are high-risk products. Refer to our PDS and TMD on our website. #1 in Australia by primary relationships, CFDs and FX. Investment trends November 2023. Leverage trading report. IG Australia Proprietary Limited. AFSL 515106.